I don't care who you are, if you've been investing in crypto, you've heard about crypto ETFs. And these ETFs are a piece of the puzzle that links the traditional system into this new crypto system. In this video, I'm going to explain exactly what these ETFs are, why they exist, how they influence the price of a cryptocurrency, and I'll even tell you exactly what to be looking for with a tool that I've created to visualize how the price moves before and after an ETF launch, so you can decide how you engage with your own portfolio. And all I ask for in return is that you hit like on this video. If we haven't met before, my name's Lewis Jackson, and I help crypto investors just like you develop a plan to turn this bull run into a lifetime of wealth and freedom. So we've got tons of ETFs that are coming to head in October 2025. That's the month that this is being recorded and published. You've got XRP, Solana, Litecoin, Cardano, Bitcoin, Ethereum, all of these ETFs happening. And I kind of wanted to just give you the 20% of knowledge that you need to know to get you 80% of the results. I guess the first question is, what is an ETF? Because you see ETFs in the traditional system all the time in the stock market. And what an ETF is in a traditional market, it's a collection of different stocks and shares, basically, that you can, or companies, that allows you to get exposure to those companies without actually buying the stocks or the shares. And usually they're done in baskets. So you get a load of them, like the S&P 500 or something. You can get a basket of assets and you can kind of capitalize on the growth of the whole thing. In crypto, though, we haven't had ETFs with baskets of assets in it yet. So really what you see is ETFs with individual cryptos. So you get the XRP ETF, the Bitcoin ETF, Ethereum ETF. These are siloed, right? They're on their own. And you might be wondering, like, okay, what is an ETF in the first place? Well, let's do it. Let's imagine you're a company and you want to invest in an asset. So I have a treasury in my business and I want to invest in an asset that I think is going to go up. But because of my industry and because of the barrier to entry in terms of like the learning curve and stuff, and we don't necessarily have enough time to learn about this new asset, maybe we don't want to invest directly in crypto, because now we're going to have to get into the world of custody and private keys and wallets, and it's all a bit too much. Instead, what I can do is invest in cryptocurrency without actually holding the cryptocurrency itself, therefore avoiding all of the need for private keys and wallets and all that learning curve. And some industries just don't want that to happen from a regulatory standpoint. So instead, you see a company like Grayscale opens up an ETF. This ETF basically means that I, as a company, can invest, or even as a retail investor, can invest in the ETF, therefore making use of the ups and downs of the crypto that it's all about without actually holding the crypto. So instead, I'm buying almost shares of a company's holding of the crypto. So let's take the Grayscale XRP ETF, for example. Grayscale, in this case, will buy a vast amount of XRP so that they can package it up into their ETF. So it's like in a box now. In that box is all the XRP that Grayscale owns. And Grayscale go out to their clients and say, you can buy a share of this box. So you don't actually hold the crypto, but you hold a portion of our share of the XRP. And in a nutshell, that's how it works. It gives you exposure to crypto without actually holding any crypto, but taking full benefit of the ups and downs of the crypto that's inside that box. So it's very much along the lines of getting exposure to the crypto, but you don't have ownership of the crypto. And there's another quick note here as we start to talk about how prices of the cryptos are impacted by ETFs, is that there are two types of ETFs. You have futures ETFs and spot ETFs. There's a big difference between the two, and more importantly for you want to know, which one is going to impact the price of my crypto more. Because you hold crypto, you'll likely hold XRP or Bitcoin or Solana or whatever, and you're seeing these ETFs come out or start to come out regarding the asset that you hold, and all you want to see is the price of your crypto go up. Like, you don't care about how it works or any of that stuff, you just want to see your crypto go up. As we start to talk about the dynamics of the market that increase the price of your asset so you can make some money this time around, you need to understand which type of ETF is going to have a meaningful impact on the price of the asset. So straight up, very simply, futures ETFs will have a very minimal impact on the price of the asset that you hold. A spot ETF will have an impact on the price of the asset that you hold. So let's explain why. A spot ETF requires the actual crypto to be held. So for example, we're going to say Grayscale again. In that Grayscale XRP ETF, Grayscale must purchase XRP to hold it in that box. So they have to take real XRP out of circulation in order to do that. With a futures ETF, there's no XRP exposure at all for anyone. This is all contracts that are tracking the price of XRP. I'm not going to get too deep into that. One affects supply and demand dynamics and the other one doesn't. Spot ETFs are what we're looking for. That's what you should be excited about. So I hope that's something you've even learned here. And this is why it's important to have this 20% of knowledge, because it can make a big difference. Now you're equipped. If you see a whole load of ETF news and they're all talking about futures ETFs, you can be like, well, I'm not going to get excited about that. That's not going to move my crypto in a meaningful way. So let's talk about why ETFs matter. Like, why is this a thing that everyone's excited about? Fundamentally, this is all about new money coming into the market. I want you to imagine a big wall of plastic, see-through plastic. And this plastic is kind of holding back water. It's almost acting like a dam. Now, every time an ETF is launched, it's almost like taking a needle or a pencil and just jabbing a hole in that plastic, and the money starts to flow through that specific hole. Right? And if there's lots of money and lots of pressure behind it, it will go a lot faster and it will fill up the other side a lot quicker. Now, what we're getting right now is someone's basically come in and gone all over that plastic wall, and the money's all flowing in. And so really, that's how you need to look at ETFs. It's money from the traditional system behind the plastic that's coming through this dam by these holes being poked, which are the ETFs, and it's flooding into the crypto world. And what's great about that is that money flows in because the traditional money is buying the cryptocurrency. So if you have Grayscale, for example, they're operating on the other side of the plastic. They're on the traditional side. The hole that is punched and the money that flows in is them buying the crypto to put in the box for their clients. All that money is flowing in, mostly because they're buying the assets, but also the demand for afterwards. And the tool that I have to help you visualize the price movements before and after ETF releases is going to really show you that impact. So before we start looking at right now with all the ETFs that are, pending approval right now, we have to look at the timeline of how this all works. And typically what we've found in crypto is that all of the applications for ETFs that these companies have made, they made these applications in October, November, December, January last year. And now we're in October, they're coming up to that point where they're either going to be approved or rejected. So it's almost a year from application to approval. That's a really key understanding, and it's obviously getting quite exciting now, hence why I've made this video to explain it all. What you'll find is from the approval date to the actual go live date, usually around a couple of days to a week. So I'm going to go right in the middle and say 4 to 5 days. If we got an approval today, it would be 4 to 5 days from today, the ETF would actually go live. And I think that's especially important to know right now, because what we're doing in October 2025 is awaiting approval for these different ETFs for different cryptos, not the actual go live. But the approval date can inform the go live date, because they basically just want to go live as soon as possible. There is a business model for these companies to have ETFs. They take fees in terms of management fees from the people participating in the ETF, and they take those every year, every month, whatever, from the people that buy the ETFs. So there's an incentive there for the business to, once they have approval, to go live as soon as they can. So before we get into this really amazing tool that I'm going to allow you to use as well to play around with, I want to talk about the supply and demand dynamics that take place from the moment of application to approval and launch, because we understand that spot ETFs are the important elements of this, right? They are taking crypto out of circulation. And when you remove crypto from circulation and the demand goes up, the price goes up, right? That's simple supply and demand dynamics. From the moment of application all the way through to approval and launch, the company that has made that application either already has the crypto in their box, or they now start accumulating that crypto to put money in the box. There's no like legal timeline there. They could already have it at that one moment, or they can accumulate it over time. Now, what you'll see is when we start playing around with this tool, these companies will often buy the crypto early on, right after their application, and continue to buy it over time until the launch date. So what do you think that means for the supply and demand dynamic? Well, it means they are actively buying for spot ETFs, buying the crypto, taking it out of circulation, putting it in the box. So there's less crypto out on the circulating supply and the price goes up. This is a really strong argument here for how the price of this ETF growth is already mostly baked into the price by the time it's launched. So what do I mean by baked in? Early on, before the ETF launches, they're already buying the crypto to take it out of supply. So the price on the market is being impacted by those big purchases, and they're buying lots of XRP as well. Now, we might as well jump into the tool right here in a second. There's another dynamic I want to explain. Not only is the company buying the crypto beforehand, perhaps meaning that the returns from after launch are diminished because all of the price has been baked in, all of the growth is already there at the launch point. But also the other impact for after launch is if you really want to see the price of the asset continue to go up after launch, you really have to have a massive amount of demand for that ETF post-launch. If we imagine the plastic and the water behind the plastic, if the water's coming down, and it's coming down and down and down as the water comes through these holes into the crypto world, the pressure on any given hole in that plastic is getting less. Typically, that's why you have pressure underwater, right? When you go really deep underwater, it starts to hurt because there's more weight of the water on you, increasing the pressure. When there is increased pressure, the flow of that money goes faster, so more water can go through those holes. But as the weight is reduced, as the amount of money is reducing from the traditional system and moving into the crypto system, the pressure on any given hole is reducing, and so you'll get less water coming in at slower speeds. What that looks like in terms of price appreciation is that the price doesn't continue to go up, it starts to level off. The only way for that price to continue going up is for the demand for that ETF to continue to increase. So let's say it's raining and that water behind the plastic is maintaining a level that's quite high. So more money is being added in, and then more water pressure comes through those holes. You can have very aggressive interest in an ETF post-launch, or you can have very small interest in an ETF post-launch. That's what this tool is really about determining. And here we are in the tool. So let's have a look at it. This is your ETF price timeline tool. This allows you to visualize everything that's going on. I just want to kind of let you know that you can look at this, you can use this and play around with the tool that I'm kind of tutorialize here for you. The link is in the description. You just have to register a free account on my website, and then you can get access to this tool. Let's specifically talk about one of the XRP ETFs. What you're allowed to do is enter in the asset name that we're talking about. So this is the XRP ETF. I don't know, you can put the name of it in there if you want. We really fundamentally want to look at the application date. When was the application for this ETF made? So there was an application made, I think it was like the 18th of October 2024. And you'll see everything's adjusting here, so it kind of tells you what's going on. And the approval date, I think we have one that's being approved on the 18th of October 2025. So we're allowed to input these dates, and you can customize this for any of the ETFs that you're kind of looking into. You want to look at the price of the crypto that we're looking at here on the day of the application. You can simply go over to TradingView, have a look at the price of the asset on the day that the application was filed. I know for XRP on this date, it was $1.20. And then you're going to put today's price. And I think today's price is $2.81 for XRP. Now, what you can see here on this visualizer is the application date that happened here, the growth of the asset in that time period where the company, let's say it's Grayscale, would be putting their XRP, taking it out of circulation, putting it in that box. They would have been doing that between these purple lines. Interesting how the price goes up during that time as well, isn't it? What's also very interesting is that in October last year, that was 1 month before real price appreciation. And I tend to think those are actually correlated. You get the application for all of these ETFs. November is one of the most famous and exciting months in XRP, November 2024. You'll also see there's two other purple lines here. These two purple lines are essentially showing approval date and then launch date 4 days later. And you'll see from the result of that, there are three trajectories for where the price can go after this has all taken place and the impact of that ETF on the price. We have three different options here. We have a low success, a medium success, and a high success outcome. When I say low success, that is the kind of thing where you've got, the ETF, the pencil goes in the plastic. As a result of that, the water comes down from the other side of the plastic. Pressure starts to reduce, And yeah, there is some money flowing in, but it's not going crazy at the crazy high pressures. That would show that the price would appreciate very slowly, and then it would be diminishing returns from there in terms of the impact of that ETF on the price. You can also see, just a little note at the bottom here, you can also see that the growth since the application of this asset specifically has been 134%. So its impact on the price, potentially, this ETF application had 134% price appreciation impact. So what if it's not just a low success? What if it's medium success? Well, if it's a medium success and the pressure maintains on the other side of that plastic and the water continues to go through at a decent speed, well, then you will have a greater price impact on the price of XRP. Looking at XRP getting to in the region of kind of $3.50 all the way up to $3.90 as a result of this medium post-launch success. And then we've also got the high model. And this is if the ETF launches and the amount that the company bought to put in the box simply was nowhere near enough, and there's way more demand for it than they anticipated, they would then have to buy far more XRP, take more out of circulation, put more in the box so that they can meet the demand for the XRP ETF, for example. And that would have a far larger impact on the price, getting us up there to around the $6 mark. It's my anticipation that with all of these XRP ETFs specifically, is that we would see a $9 to $10 XRP this bull run. And I think that is including all of the ETF impact, right? I don't think the ETF impact takes XRP past that point. I think that's where it gets us to. And I think these models here that we've created show that as well. Remember, you can adapt this for any asset, any ETF that you're looking at, and it will give you these relatively decent projections. And also, interestingly, the price of the assets at the different dates. You can see the date there and the prices that are changing. So use that tool, maybe even screenshot the results and share them with me on Instagram at lewis.w.jackson. And I want to let you know that behind the scenes here, we have opened up enrollment once again for my BlockFlow program. You can apply for the BlockFlow program, which allows you to build out your full personalized crypto exit strategy with specific price points for every single asset in your portfolio, a specific amount of tokens that you would sell at each one of those levels, how many take profit points you have, is all calculated within all of the tools and the models that we've generated in the BlockFlow program. If you want to apply for that and have a conversation with me, there's a link in the first line of the description below. If this video was really useful for you, please share it with someone, click like and the subscribe button. Stay emotionless, and I'll see you in the next one.